Hello, greetings, and welcome to Dividend Blasters. This is our 46th video, and the topic today, invest in BlackRock. And by investing in BlackRock, you could also be investing in the cryptocurrency Bitcoin. I did a video last month where I did cover BlackRock. And the major takeaway there was that BlackRock is the largest, most influential asset management firm in the world. They manage over $9.5 trillion in assets. And you know what? If you want to invest in the smart money, if you want to invest in the big money, if you want to invest in a firm that knows the score, you invest in BlackRock. They're very influential in the business world. They are very influential in government. They are pursuing issuing an ETF, or an exchange traded fund that is uh, focused on Bitcoin. It'll be a Bitcoin ETF. They filed an application with the SEC just a couple weeks ago. We're waiting for the outcome of that. So that's what I'm going to talk about today. And let's press on. So, disclaimer, I'm not your financial advisor. The purpose of this video is for information and education. It should not be taken as financial advice. It reflects my own personal opinions, my research, and my experience as an independent investor for the better part of 30 years. So please, I urge you, do your own research, do your own due diligence, and consult a financial advisor prior to making any financial decisions. Thank you for joining us today for this video. I'd kindly ask if you'd give us a like. And at the end of the video, if you feel so inclined, subscribe to our channel here at Dividend Blasters. And feel free to share the video with a friend or a family member. All right, let's talk a little bit about BlackRock. This is going to be a little bit of a different video than what I did last month. There's more detail on BlackRock in that video. You can check it out. But just a high level recap, they're the largest asset manager in the world. I mentioned they manage over $9.5 trillion in assets, mostly ETFs and mutual funds. You can go to their website, read about it. It's right there. I mentioned that they did file with the SEC Thursday, June 15th for a Bitcoin exchange traded fund. The purpose is that it would allow investors to get exposure to this cryptocurrency as it comes under more intense regulatory scrutiny. Uh, BlackRock's iShares Bitcoin Trust will use Coinbase custody as its custodian. The SEC has yet to approve any applications for spot Bitcoin ETFs, so we're waiting on that. So it's been about 3 weeks. We'll see how that goes. If it comes to be, it could be a game changer. I mentioned at the beginning, they're the smart money, they're the big money, they know the score. They're very influential in business and in government and in politics, particularly. This I didn't mention, and I think that this is quite striking. Um, BlackRock has submitted 576 ETF applications to the SEC. Only one didn't get approved. That was in 2014. The time frame for SEC approval is to be determined, but the CEO Larry Fink is very connected to government, and he's connected to folks at the Federal Reserve, connected to folks at Treasury, and I'm presuming he's well connected with folks at the SEC. So we'll see how this goes. I will just tell you right, right at the get go. My plan has been and will be to invest in BlackRock, ticker symbol BLK. They trade, so they are an investment. You can invest in them. You can invest in their holdings as well. And I'm going to show you some screenshots of their top 100, and you can look at them at your leisure. I will probably invest in the BlackRock ETF for Bitcoin. I should call it the Bitcoin ETF managed by BlackRock. So I will probably do that, but I will most definitely be investing in BlackRock. I'm including some articles. These were provided in the previous video. You can look at these at your leisure. The word is that they are the most influential company in finance. This is an article from Tip Ranks. Really covers their the relationships in government and in business. Nine interesting facts about BlackRock. The nine and a half $10 trillion in assets is the major takeaway. This is an article in Business Insider. Their influence goes very deep in the federal government, especially in the Federal Reserve and in Treasury. Um, anyway, I'm not going to go through all these. You can look at these at your convenience. But one thing I will just kind of go through again briefly is that in the last video, I did pull their 13F submission, which is a quarterly submission required by the SEC for all investment managers managing more than $100 million in assets. This is theirs. I pulled it. And here is the website. You can pull it too. And here, these next two slides are just a list of the holdings that they hold and the stakes, the dollar stakes, the number of shares, and the percentages within their holdings. So, the top 5 or 10, it's Apple, Microsoft, Amazon, Nvidia, Google, Tesla, United Health, Meta Platforms, Berkshire Hathaway, and the list goes on. These are very familiar names, the big names. It's not surprising that BlackRock is investing in these top 100 holdings account for 1.8 million. I'm sorry, not even close. 1.8 trillion. Can't even get my head around that. 1.8 trillion dollars. So that was the top 50. Here's the next 50. You can see UPS, Qualcomm, AT&T, Lowe's, um, golly, American Tower. I'm just kind of scrolling. General Electric, T-Mobile, um, Citigroup. Okay, so anyway, you get the picture. Okay, so that's BlackRock in a nutshell. And I'm going to go a little bit deeper, but not too much deeper later. I think we've made the case that they're big, but we'll go a little deeper, a little bit more about Bitcoin. And just in case anybody's asking, there is no such thing as a physical Bitcoin. It's a digital asset. It's fully electronic. But artists, they create these visuals to help us understand that it is a quote valuable asset. It's gold. It's always gold. Um, I'm sorry. So, why would people invest in Bitcoin? What's the appeal? The appeal is this: some people feel that it is. It's a decentralized digital currency. It's not centralized. It's not controlled by any government entity. It's not controlled by a federal government or a central bank like the Federal Reserve. They do not control that. This is different than what we're hearing about lately in the news about the central bank digital currency that the Federal Reserve wants to roll out. You know, maybe later this year. Um, they've already established this thing called FedPay, which is sort of like the network that it'll run on. But anyway, another appeal is that it's a potential medium of exchange that will hold its value. We hope prices have fluctuated a little bit, but it's not going to be inflated away by excuse the typo, by central banks wanting to print more money. We've seen this with the Federal Reserve really going on for many, many years, particularly since 2008. But it's really been something that's been going on for decades, uh, probably since we got off the gold standard and a little bit before. Um, Another appeal is that it's very difficult to counterfeit Bitcoin due to the blockchain ledger system. That is basically the ledger system that manages the currency. It is it's hard to cheat, if you will. It's hard to counterfeit. And what's also appealing is that no more than 21 million Bitcoin can ever be issued. Okay, so you can't just start creating more Bitcoin out of thin air. There's only going to be 21 million. That is it. So it's a limited supply. Let's talk a little bit about Bitcoin's performance over the last, let's see, year to date. Well, let's see. Right now, as of this morning, uh, Sunday, July 9th, Bitcoin is valued at $30,269. If you look at the fluctuations since January 1st of this year, it's come up almost 83%. So it was then back on January 1st, it was 16,572. Give you a little bit of background. Back in November 2021, Bitcoin hit its peak of around $69,000. And then it went down precipitously. And for several months, it was in the $30,000 to $40,000 range. And then it's been coming down. And for the better part of the last year, it's been below 30,000. Um, then it went down below 20,000. And as you can see here on January 1st, it was around $16,000. It's up, it's going up. So I find that to be quite fascinating. And then, if you wanted to look a little bit further, we can see that since BlackRock submitted their application to the SEC to have a Bitcoin ETF, it has come up 15% since June 15th. That is a decent increase. That's really only about 2.5 weeks. The CEO, Larry Fink, has been out, promoting the approach to go ahead and have a Bitcoin ETF under BlackRock. He's done a number of interviews, print interviews. He's done interviews on television. Here's an article in Bitcoin Magazine where he basically says Bitcoin is an international asset, very much like gold. It's really quite amazing. A lot of these guys that are on Wall Street, they kind of poo-pooed Bitcoin for years. I think they kind of looked at it as a threat, um, to what they do, which everything that they do is denominated in the U.S. dollar or maybe foreign currencies, but not really in a new currency that's not controlled by any central bank. An article here in Decrypt. He basically says it is digitizing gold. That's what Bitcoin is. So he's speaking very favorably. It's in his interest to do that. I think it's very good for investors in Bitcoin that this is happening. And it's also probably good for investors in BlackRock. Most recently, and I think that this is great, is that there was an interview on Fox Business with Liz Clayman and Charlie Gasparino, where Larry Fink basically said that this Bitcoin ETF is going to democratize crypto. He also said that it is a great hedge against devaluing the currency. It's a great hedge against inflation. Yes, he said that. So I got to tell you, you know, I I have some Bitcoin. I have a retirement account where I have it's a self-directed one. I got several retirement accounts. One of them is a cryptocurrency, and I got a handful of Bitcoin. And I was thinking last year, maybe I should just, maybe I should just sell it, and maybe go back into some dividend growth stock. Because at heart, I am a dividend growth investor. I like dividend growth stock. I like dividend growth ETFs. I actively manage those assets in my brokerage account, but I have my retirement accounts. I have one that's managed by a money manager, and I don't really touch it. And I have a few that are managed by me, but I don't manage them that actively. They're self-directed. I have one that has precious metals, physical gold and silver, and I have a smaller one that has crypto. But I'm going to hold on. I'm going to hold on to the crypto one for a little bit, just kind of see where it goes. I think that this is exciting. Now, here's just some fundamentals on BlackRock. Um, Friday, July 7th, it closed at $684.10. It's not a cheap stock. It's kind of pricey. It's got a forward PE ratio of 19.6, which, compared to the overall larger market, it's about the same. The S&P 500, it's almost exactly the same. I'm not surprised because they invest in everything in the S&P 500. It's a little bit less than the Dow Jones of 22 and a half. I do like that dividend rate. The forward dividend yield is 2.92%. Because the price is so high, you're going to get a $20 dividend. You get $5 every quarter for every share of BlackRock you own. So that's pretty good. They got a market cap of $102.5 billion. So some more BlackRock fundamentals. Uh, I'm looking at the total return, and in year to date, they're down about 2.5%. I'm not surprised. A lot of investments have been down, although we're starting to see the market rebound over the last few weeks. So we'll watch that closely. But if you look at year to date, and that goes back to, I want to say 1999, so back about 24 years, they've had a total return. And remember, total is price appreciation and dividends. They've had a total return of over 7,500%. So I think that that is extraordinary. Got a great track record. If you look at their dividend grades, with the exception of the dividend yield, and I think a 2.92% forward yield is fine. Um, they're giving it a D plus. I'm not quite sure I agree with that. I think that's fine. I'd love to have really yields above 3, but you know what I love? Um, that dividend growth rate, that 5-year CAGR is 12.93%, a little under 13%. So together, and I've talked about our threshold or our hurdle where we like to see the yield and the CAGR eclipse 10%. Well, this is basically over 16%. So that's why they get an A minus in dividend growth. Dividend safety, they get an A plus. They got a safe payout ratio under 60%. It's 58. That's fine. I'd like to see them a little lower, but this company has tons of cash. They are not going to welch on the dividend ever. Dividend consistency, they get an A minus. They've been growing that dividend for 13 consecutive years. They're halfway, 12 years away from being a dividend aristocrat. All right. Dividend growth grades, well, they get an A minus. And they get an A minus because look at those CAGRs. I mean, I'm seeing a lot of green. Green is good. That means that they compare favorably against their peers and competitors in their sector. So, look at the trending 12-month 1-year growth rate. It's almost 14%. It's about double the sector median. And you know what? You keep going down. Look at the forward growth rate. It's almost 9%. The peers are a little under 6. You keep going. Uh, it's just a lot of green. It's a lot of green. You can look at this at your leisure. I'm not going to go through all of them. And here are their peers. So you have, of course, you see BlackRock on the left. Then you have Blackstone, and Larry Fink actually worked at Blackstone before he founded BlackRock. Brookfield Corporation, ticker symbol BN. They're about half the size market cap, but they have about 10 times as many employees as BlackRock. KKR, Bank of New York Mellon, and Ameriprise. Those are their peers. All right. So if you look at the price return, you basically see that over the 24-year max time horizon, BlackRock is about 4,700, almost 4,800%. Uh, Brookfield is about 4,600%, and everybody else is way, way, way behind. Remember, Brookfield is about half the market cap, twice the number of employees. It tells me that BlackRock might be a little bit more efficient. I tell you. So that was price return. Total return is that what we just saw, the price appreciation plus dividends. It's a little bit closer now between BlackRock and Brookfield. BlackRock's about 7,600%. Brookfield's a little over 7,800%. I'll tell you, I have heard of BlackRock. I am not as familiar with Brookfield. I would have to dig a little deeper in them, but I'll tell you, BlackRock feels like a better horse in this race. All right, that is it. That is everything I have. I told you this was going to be a shorter video. So I'd kindly ask if you would give us a like for this video and consider subscribing to this channel here at Dividend Blasters, and share this video with a friend or a family member. Just a quick recap. I am very likely I'm going to invest in BlackRock, ticker symbol BLK. I am going to watch very closely how things shake out with the Bitcoin ETF that's issued by BlackRock. But I will tell you that I'm very excited about this. So I hope you found this to be enjoyable and informative. And if you kindly give us a like and a subscribe, we would greatly appreciate it. Until our next video, have a wonderful day and God bless.